Thank you. So we're starting now and we're looking at invest with clarity. And we have called this session real questions, honest answers. Real questions, honest answers. Like I said, these are some of the questions that people have asked since we started this session. They've been asking, okay, what about this? What about this? Oh, what of that? So we're bringing everything together and we're going to address them as we go on in this session. So please follow me. Likewise, and well, I want to believe, or I just want to assume, I might also assume that some of the questions may also prompt your own questions. Yeah, we won't hesitate answering them. So let's go on. Let's pick these questions one after the other. For those who are joining us for the first time, well, my name is Mr. Meaningful. I've given a background, and I just want to say, if you have followed the sessions 1 to 4, then you already have a foundation. We started with how smart investors think. We looked at how to identify growth locations. We broke down real estate structures, and we introduced along the line the buyback or the co-ownership model. Well, let me be honest. One thing is to have information. It's something else to make a decision. Between having information and making a decision, you'll have questions, like we have already, and these are the things that we want to look at. Some questions will be asked, some will not be asked. Well, some even are probably uncomfortable. Yeah, some people might have things that, they may just remain indifferent. And I've heard that, I read somewhere that indifference is even worse than hatred, right? So today is going to be different. We're not teaching anything today. We're just trying to give some clarifications to some of these questions. So everything we're addressing tonight comes from questions sent after the webinars, conversations with prospective investors, and the silent concerns people don't always voice. So we go straight into it. And these are some of the questions. Let me start with the most common one. This sounds good, but what's the catch? As people ask, this sounds good. Yeah, but what exactly is it about? Well, I always like this question because serious investors don't mind, they don't move blindly, right? That's the truth. There is no hidden magic in this particular case. It's as simple as it's presented to you. Last week, for those who connected with us, we brought in a developer who was able to break down the model, put clarity, deeper clarity, or clearer clarity. Permit me. Don't worry. It may not be correct, but who gave clearer clarity on the matter of this is how it runs and this is what we collect your money to do. So there's no magic about it. In response to that question, you co-own a real asset. That asset is positioned for growth, and there's a defined exit through a buyback structure. Simple. However, note this, returns depend on real asset performance, and there's also a timeline. You may need to be very sure about this because I always tell people, this is not a get-rich-quick scheme, right? It's a structured win. The essence of the time and the need to have the clarity so that you won't start. And there are about 3 things that I tell people who come in through me. I tell them, number 1, don't put in a money that you would need earlier than 12 months, right? Because breaking the structure midway is like you have a 3-legged stool and somebody comes and pulls out one of the legs. That chair will collapse or that stool will collapse. So there's no catch about it. It's simple. Your investment is backed, right, by real assets. The performance has been tried and tested over time, and you are given a definite time for you to exit the investment, right? So we'll move on to the next question. Is this one of these schemes that collapsed after a few years? Yeah, it's a valid concern. But here's the difference. This is tied to a physical asset. Note that. This is not something that is not Ponzi. And that's why some people will say, okay, the rate was 35% last month. Why is it 32% this month? It's not, again, it's something that is cost-driven, right? It's an investment that is cost-determined, rather. The cost is part of what determines the returns. So when the cost of development increases, definitely the profit will reduce, and they will tell you that, oh, for this month, this is what the projection looks like. So your investment is tied to a physical asset, not dependent on new investors coming in. You know what in accounting they call it, there's something like that they call teaming and lading. You take it out here, you plug it. No, that's not what they do here. They're not waiting for new investors to come in. If nobody joins tomorrow, the property still exists. The value can still grow. It's as simple and clear as that. Another common question that people ask: why haven't I heard about this before? Why haven't I heard about this before? Well, because real estate traditionally was structured for people with large capital. That's the thing. Once some people hear real estate, even up till today, I've not even responded to that person. Even up till today, somebody was still asking me, how much do I need? Is real estate, But this model changes everything. It creates access. It's not new globally anyway. For those who are exposed to the global finance market, you have what you call REITs, Real Estate Investment Trust Scheme. This is a model after that pattern. It's just becoming more visible, more accessible locally, right? It's nothing new, nothing totally new. So that you are hearing about it for the first time, that's fine. But what are you doing about it? Make a decision today. Now let's talk about money. How exactly do I make money? How exactly do I make money in this business? We heard about one of it last week, but first, capital appreciation. If you buy real estate, for those who are familiar with real estate, if you buy a property, depending on the type of property, depending on the location, right? If you buy a property in 2024 for 10 million naira, that property would not be worth 11 million naira by now. It would have appreciated astronomically, right? The allocation that you buy property before the end, in fact, we'll run, just go along with us in this series. You'll see a different other models that make even more fantastic returns than what you are being paid here, right? So real estate is a winner's game. It's a winner's game. A winner for the investor is an all-win game, rather. It's an all-win game. The investor wins, the developer wins, the broker wins, everybody who is involved in it wins. So you make money by capital appreciation, the property increases in value. Secondly, the buyback premium, right? You enter at today's price, you exit at a higher pre-agreed price. In some structures, you may also have rental income. So your return is not guesswork, it is planned. It's planned. Then there's a sharper question here. There's another one here. It said, are the returns fixed? I already answered that. I told you that no, they are not fixed. They are structured. But what happens is that the rate at which the returns you are going to get is agreed up front, right? It is structured, but not like fixed savings account. Your returns depend on entry price, the execution, and the market growth. So this is not gambling, but it's not passive interest. It is active interest. I hope this is clear to us. Please, if this is clear to us, if anything, I hope we're clear about the question, the response to the question so far. Can somebody respond, please? Thank you very much. Thank you very much, Abiodun. I appreciate it. Thanks for the response. So the next question here is, how is the buyback price determined? How is it determined? One, it is pre-agreed, but more importantly, it must be justified. Always. Okay, Adekoya, thank you. Can you just mute? Always ask questions. Always ask questions. What is driving the future value? What is driving the future value? If there's no clear answer, please pause. We have explained to you in this situation. You buy land, the land is improved upon. After a period of time, you get returns. I mean, the property is disposed, and you get compensated based on the amount you bring in at the pre-agreed interest rate, right? Now we're looking at another question here that says, what guarantees do I have when I bring in my money? Do I have any guarantee as to, okay, what am I going to get? Please, can you mute? Please mute. So let's be clear, this is not based on trust alone. Yes, you trust the person that you are giving your money to. That's fine, that's good. But beyond trust, everything is documented. It is structured. And you get a deed. That deed, right, is a legally backed document. Also understanding that this is an investment, it's not fixed deposit, it's an investment, right? So you are not keeping your money there and waiting. No, the money is put to use. That money is put to use. Some people ask the question, what if the developer defaults? Like the one of the developers we brought last week. What happens? Let's be practical, and this is a very practical one, right? Every form of investment, there is risk. That's the truth, though. Don't let us deceive ourselves. But there's a difference in this matter. In this case, there's a difference. What's the difference? In a worst case scenario, the asset that you, because in your deed, the value that your asset, that your investment covers, the size of land that your investment covers, or whatever property your investment is put in, is clearly stated. Your investment is not just floating. The asset still exists. The asset still exists. Last week, there's this question that people usually ask. Oh, and in fact, I have an ongoing battle in quote with an investor who wants to come in and is asking, who owns the title? Now let's look at it this way. The asset is held within a structured ownership system. Your interest is legally documented. It is stated your interest in that property. It's like when you buy into an estate. You don't say because you have bought into that estate, they must give you the entire access to the entire estate. No, your portion is clearly stated and you are entitled to that, your portion. You may not hold the document physically, but your ownership is recognized. Your ownership is recognized in this investment structure. Your ownership is clearly recognized, even though the title is not given to everybody. You know, this is like fractional investment. They can't tear the title paper and give to them. No. But on the portion, the document that is issued to you, it is clearly stated there that you have a vested interest in that property. Now, another question that they say, what if the project delays? What if the project delays? Well, delays can happen. I had a project that was supposed to be worked on. The investor made the payment. In fact, this was a building, not even a cashback project, right? It wasn't a cashback. It wasn't a co-ownership investment. It was for a property. But because of delay in approval processes, government approval processes, the project could not kickstart as agreed. So they had to reschedule, but eventually it got done. So delays can happen. What matters is there a realistic timeline? Is there transparency? Are there safeguards? Serious projects usually plan for delays. So if they even tell you 12 months, right? Ideally, that project is probably rounded off towards like the 9th month, so that every other thing, the I's that will be dotted, the T's that will be crossed, by the 12th month, everything would have been ready for disbursements to all the investors for that particular tranche. Now, we want to move a bit further, and some people ask, how liquid is this? Not very liquid. This is no money for emergencies. I answered that earlier. How liquid mean people who are just that question are people who always think, what if I want to get my money before that maturity? No, this is not the kind of money that you want to do. This is not the kind of investment you want to do that with. And I gave the analogy earlier of a three-legged stool where if somebody pulls out one, the stool comes crashing, right? So it is not until the end of your project. We have people on this call who some of them who testified last week that as soon as, in fact, I read that last week, their investment date, maturity date was April 29. By April 30th, they received their alert in their account. It's as simple and it's as structured as that. It's as simple as it's as structured as that. Now, the next question is, yes, up till today, somebody still asks me, how much can I start with? How much can I start with? Can I start small? Yes, you can. There's no land you can buy for 1 million naira. Not anywhere around Lagos. That as a certified real estate consultant that I am, I can't. If anybody is telling you that there's any land in Lagos that you want to buy and the cost of the land is 2 million naira, I will say it in Yoruba and I will interpret it. Say ferege. We say in a local part, we say peak race. If somebody tells you that any land anywhere around Lagos that they are selling for 2 million naira. When I mean around Lagos, even in the border towns around of Lagos. But with 1 million naira, you can start this investment option. You don't wait to be ready. You start and you grow. I know people that started with less than 10 million thereabout, and their money is running into tens of millions now. because they started a couple of years back. So can I invest more later? Yes. People start with 1 million and they say, well, after 3 months. Yes, I know somebody still did that last year. It's only that the different investments are kept at different of if you put in 2 million naira in January and by March you want to do another 3 million naira, yes, you can do your 3 million naira. The January one will continue counting, while the one that will come in March will also continue counting, right? Now, there is a question that people ask. They want to treat this almost like a MMM or whatever, right? Should I borrow money to invest? No, this is not an event. They will tell you, bring 10 million naira today. In 3 months' time, you get 55 million. No, 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 at all. So I will advise you not to borrow money. It's not a quick flip transaction, right? Use surplus funds and planned capital. Surplus funds. So for those who follow my post on Instagram, yesterday I said, saving, if all you do is saving, you can never get wealthy, right? But you can plan your savings towards, in fact, I am doing one now. I have a Cowrywise account where I keep money in there every month. At the end of a particular period, when the money accumulates into a bulk sum, I sweep it out and put it into this investment because it is going to give me higher return than whatever I'm going to get elsewhere, right? So that is the kind of way that you can invest in this, even if you want to start small, right? Now, another question that people ask, who manages the property? That's not your problem. That's one of the beautiful things about this. You know, we talked about during the course of this series, we talked about rental property and the aches and pains of rental property. Is rental property bad? No, not at all. It's one investment that we're also going to look at as we continue in our webinar series, right? But for this particular investment, you don't bother about the management of the property. You don't care whether the land is growing bushy. You don't look at none of those things concern you, right? Excuse me, please. So in this particular case, the developer handles everything. He handles the development, he handles the management, and he handles your exit. You are not buying stress, you are buying structure. My professional colleagues, right? My former professional colleagues. You know, and that's one of the beautiful things that you will, bankers in particular. Yeah, they are almost all other professionals. Once you are facing your job, you want to face your job. So, but in this particular case, the stress of having to manage property, you are not going to one weekend. The only weekend that you're supposed to rest, you are going to check no. This one is clearly defined. You are not buying stress, you are buying structure. Now we want to look at another question that says, how transparent is this process? Right? It's very transparent. Transparent to the extent that you can even go to the site, you can go to the property location, you can go and see how the project is progressing. You can always take a stroll there and go and see it, because is a physical asset that you can see, and you can see the milestones. There can be communication. You can make inquiries. What's happening about this particular project? Or what is there any? You can see it. So if transparency is missing in this or in this particular investment type, then that's a red flag. So it's transparent. Now it's transparent. Now we talked about in the course of this webinar series, we also talked about other types of investment, shares, stocks, fixed deposit, and all that. So people ask the question, is this better than buying land? This was still discussed yesterday. Yeah, with a prospective client, but I'll tell you the truth. The truth is that it is not as if it's better than buying land. It is not better. It is not better, but it is different. What are the differences? Number one, lower entry. I told you earlier that there's nowhere you can get land in or around Lagos, right, that you will get for the same amount that you are bringing into this investment. Nowhere in and around Lagos that you can get an amount. So with this, your entry level is more affordable. You can easily go into this with less stress, right? Excuse me, please. You don't need as much capital as you need. Yeah, but even if you have so much, you have all the capital. The beautiful thing about this is that you have a defined exit period. you are not running on the day, you are not bothered about the day-to-day running of the project, right? So a number, these is one of the reasons why, yes, if you buy land, your land can appreciate by 100% in the next 1 year. But can you sell that land immediately? You want to sell it? People who are investors there, who have invested in property here, can confirm that. Can you sell that land immediately and get back your money? Maybe not as fast as you need to do. So co-ownership is it gives you structural returns and it gives you defined timelines. So the question is, what are you optimizing for? Are you optimizing for the long term, or are you optimizing for structural returns? Are you optimizing for defined timeline? This is what co-ownership gives you. We'll be running off this shortly, right? We just take a couple more questions. Does this protect against inflation? Definitely. Inflation rate currently is about 15.5 to 16%, right? But this is giving you a higher return. To a large extent, yes. I mean, real estate definitely rises with inflation, and sometimes in this particular case, it is outperforming inflation. So your money is not idle. Can this be combined with other investment? I'm just trying to, these are questions that people ask from time to time. Can this be combined with other investment? Yes, it can be. This shouldn't be your only strategy. I tell people, when we looked at the other time, we looked at stocks, shares, rental property, and all the, we said, is cryptocurrency bad? I won't say no. I don't know. And in fact, that one, I don't even know so much about it, but it's not bad. Is buying land bad? I just answered that. I said there's nothing wrong with it. Is buying shares bad? No. Is putting your money in fixed deposit bad? No. But you just need to look at what exactly are you looking at. Co-ownership gives you defined entry, defined returns, defined exits, right? Those are some of the benefits that you can get from co-ownership. The investment is usually for, how long is the investment? People have asked that a couple of times as well. I tell people who come in through me, who want to do this, I tell them, do nothing less than a minimum of 12 months. 12 months is a fantastic period, both for you and for the developer. Are there hidden charges? Nothing like that. The only thing that you get to pay now, based on the new tax law in Nigeria, is the withholding tax, which is just a 10% of your earning, not of your investment. Your investment is secured. You get everything you want to get, but you get, by law, legally, you pay a withholding tax on your earning, right? So there are no hidden charges. There are no hidden charges. Everything is clearly stated up front. Is this suitable for me? Can I do it? Am I the kind of person that this type of investment is good for? Yes, it works well. If you want passive income, if you want passive real estate exposure, this is one thing that is good for you. And you don't want operational stress, this is good for you. And you can commit to funds for a period of time. This is good. If your fund, or if you tick any of those boxes, do you want passive real estate exposure? If it is yes, it's good for you. If you don't want, do you want to avoid operational, let me put it that way. Do you want to avoid operational stress? If you tick yes, then this is good for you. Do you have fund that you can commit to a particular period of minimum of 12 months? This is also good for you. Yeah, there is a 6-month option, but if you call me and we talk, I'll explain to you how the 12-month option betters the 6-month option. I always go for the 6. I always advise people that they should go in for the 12-month option. It's always better, right? Yeah, everybody has that. Some people, like one of the investors I've been speaking with, he's asking, he's been burned before. So he's asking, what if I've been burned before? Then you should be wiser. What that should afford you is that use that opportunity to ask better questions and demand better structure. Like the cashback option gives you. It gives you better structure, and like the questions you have are being answered here, right? Now let's get through a bit. Why should I trust this model? Please, I want to tell you, don't trust any model blindly. Don't trust any model blindly. Verify, ask questions, and understand. I have somebody who just made a decision today, but before then, trust was the underlying thing, but we push and say, don't just trust, ask questions. Questions were asked, clarifications were given, and eventually decision was made. Now, one of the very common, and I'll say, okay, not exactly the last, but yeah, the second to the last question says, when is the right time to start? There's the saying that the best time to plant a tree was 20 years ago. The next best time is now. Waiting endlessly does not pay you. No, Gone are the days of patient dog eat the fattest bone, not even with this, right? Some people who invested 2 months ago got a particular interest. Those who are investing this particular month are getting a lesser interest. So the earlier you make your decision, the better. So, and the last question that I am asking you now is, what separates smart investors from those who are not smart? Two things: smart investors act early, they take quick decisions, and they ask better questions. So if you still have questions, you can still ask me. We'll be running off on this series. Like I said, this is a question and answer session. But let me just see if there's anyone who has a question. You can please let us know if you have a question just before we round up. But while you're thinking about your question, let me ask you honestly, how many of you have considered real estate before? Is there anybody who has ever considered real estate before? Yes, anybody that you have ever considered real estate as an investment option before now? You can type your response in the chat box. Nobody has ever considered real estate before? No, that shouldn't be. You can unmute your mic. You can drop your correspondence in the chat box. The question I asked is simple and straightforward. Have you ever considered real estate as an investment option before? While you're thinking of your response anyway, if you have ever done that, but you didn't proceed because we are not fully clear, that's why this session is very important. That's what we're doing here. So as I round off, I want to round off with this. Clarity does not remove risk, but it reduces costly mistake. Clarity does not reduce risk, it reduces costly mistake. Facebook family, I'm sure you're following us. Thank you very much, right? Most people don't lose money because opportunities are bad. They lose money because they didn't understand what they entered. I don't know, I mean, if there's anybody here who has read the book, The Richest Man in Babylon. One of the first mistakes that investor, the guy, I can't remember his exact name now, made was that he invested in something that he did not understand. And that is why we're giving you all this clarity about the co-ownership investment scheme, right? So here's what I will advise you. Get details, review properly, ask your questions, and start at your level. Then build, grow gradually. So I want to say, if you are ready to explore, you can request for the full details of the current opportunity. We'll walk you through, Meaningful Realtors will walk you through everything and will help you make an informed decision. This is no pressure, it's just clarity. I want to say a big thank you once again to everyone that connected tonight. The recording of this is going to be available. You can make a request in case you still want to listen again, look at the questions. And if you still have any question, you can always reach to me. Here's my Facebook family. You can see I'll just give you my number. And everyone here, my number is +234 703 091 0000. Thank you everyone for connecting. Biodu, I very much appreciate seeing your face here, joining us. I appreciate you. Thank you very much. So one thing though, this is making me interested in real estate. I will surely reach out when I am ready. Don't worry, we are here for you. Please be ready so very soon. Don't stay too long on the fence. But you can always start with this as small as it is, with as low as ₦1 million. You can even reach out to me. If you have less than that, we can work something out for you. Once again, and as always, I remain yours, Mr. Meaningful. Thanks for following us and thanks for keeping close by. We'll tell you more about other real estate investment opportunities as we go into the month of May. We're looking at another investment opportunity in real estate. Thank you so much. I appreciate you. I'll say bye for now. These are weekly series. I want to apologize that for those who waited for us at 7:30, we couldn't start then. I apologize. But we started, I was in a meeting that I could not leave before then. But this program, this webinar comes on by 7:30 p.m. on Facebook Live and on Zoom. Instagram live as well, but we're not doing Instagram tonight. So Facebook, 7:30 next week, we'll see. Zoom, 7:30 next week, we'll see. And I say, Zoom on in grace. As you go on into the month of May, I pray that the grace of God will continue to abide with you. Bye for now. See you next week. Thank you.